Hey, how are you? Hope all of you are well. It's your CPA Manish here today on Sunday, the 24th of October 2021. And today we are going to continue our discussion about real estate. And in this series today, we are going to take up the question that has been asked the most. I've got dozen or more questions asking me about should we use an LLC for a real estate investment. So we are going to jump on to that question today. It seems that a lot of you have question on the LLC thing for the real estate. Before we jump on to our discussion, a legal disclaimer. This is not a tax or investment advice. We are doing this only for your entertainment or education purpose. The response has been very overwhelming, so thank you so much for that. Let the questions keep coming, so we will keep addressing everything about real estate in future videos. If you have not watched my previous couple of videos, at least the third and the fourth episode on the series, you definitely want to take a look at those first. And now we can jump onto the question of LLC. Okay, so let's start discussing that. So what is the LLC? An LLC stands for Limited Liability Company. It is a kind of entity structure that you can use to own your business or to own your real estate business. So you can own your business or real estate or any other activity under a LLC. Okay. LLC, as the name suggests, stands for Limited Liability Company. Limited liability. So what limited liability means is that if you own a business or a real estate under LLC, and then God forbid something happens in that business or something happens in that real estate, you know, for example, if there is a trip and fall case and the tenant decides to sue you, or if a light bulb all of a sudden decides to fall off and hit your tenant or tenant's family, and they get really hurt and they decide to sue you, and say, God forbid, they are successful in their case and they do get a judgment against you, then your liability towards these kind of incidences is limited to the extent of whatever your investment or whatever your equity is in that LLC. Okay, so anything untowards that happens, you are only liable to the extent that you have your money invested or your equity invested in that particular LLC. What this means is that other than that equity or investment that you have in that LLC, all your other personal home, all your other personal assets, your investments, your savings, your bank accounts, all other investments that you might have in other LLCs, anything outside what you have in this LLC, all that thing outside, all that personal assets that you have, that is protected. And this judgment against your LLC can only take what you have invested inside that LLC, and everything else is protected. Okay, so that is what a limited liability means, and that is the biggest feature of this kind of entity structure, that your liability is limited and all your other outside assets are protected. So asset protection is the biggest feature of owning something like a real estate under a LLC. Okay, so that is one benefit of owning something under LLC. There are also other reasons why we professionals, we accountants, we attorneys, we like to have most of you own good real estate always under LLC. And one of the biggest reasons that I always tell my clients that you should consider doing an LLC is because LLC helps conceal your personal information from others. Okay, so if you form an LLC and you form it correctly, and say you don't give your personal home address while you form the LLC, you can use the address of the attorney who is doing the real estate deal, for example. or if you don't disclose your ownership structure, you don't explicitly say that you are the owner, you can form the LLC as a manager managed LLC, where anybody looking at the LLC information, which is a public information, but anybody looking at a LLC information which is manager managed would not know who the owners are. They would only assume that the LLC is managed by a manager, and they won't know the ownership information. So it helps conceal your ownership information. It also helps when you have to go to bank for financing. And if you do not have a LLC, then you have to give all your personal bank statement and all. They take your personal information anyways. But if it is not under LLC, then you have to give all your personal bank info and everything that you personally own at the time of financing. And then also when you have to give your information to the tenant, right, for payment of rent, you don't want to give them your personal bank information or your ownership information. You just give them the LLC name and the LLC bank info, and you can conceal your personal information. That is very important when you're a physician or a high asset or a high net worth client, right? So it helps conceal your personal information, right? And then one more advantage of doing an LLC is that it is an extra layer. It's an extra hoop for somebody to jump if they decide to come after you, right? So if you own something directly in your personal name, you're directly susceptible. And if there is a LLC in between that is formed correctly and it is there, not only formed correctly, operated correctly, then it's an extra layer between them and you personally. And it helps that additional hurdle that they have to jump before they come to you, right? Unless you yourself have pierced the veil, so to say, of that LLC protection, people cannot really jump that hoop or hurdle and come to you, really, okay? But even everybody will try to come to you, but even when they try to come to you, there is an extra hoop to jump that always helps, okay? So these are what LLC is. LLC is a limited liability, helps you limit your liability up to the kind of equity or investment you have in that entity. It is used for asset protection, because if it is limited to what you have in that LLC, everything outside that is protected potentially if you do everything right. Okay, that is, you have to operate it correctly, and we are going to discuss about it. Then there is quite a bit of asset protection you get. It helps conceal your information on the formation. It helps conceal your information during financing with the tenants and everybody. It helps conceal the ownership information also. And then it is the extra layer that people have to jump. It's an extra hoop or hurdle. So that acts as a deterrent or a demotivator for somebody who wants to go after you for wrong reasons, right? So these are the things that the LLC is, okay? Now let us refute some of the misunderstandings or misconceptions about what LLC is. So now we are going to discuss what LLC is not, okay? So it is wrong to assume that if you have a LLC or if you own a real estate or property under LLC, that is foolproof. You know, it is not really foolproof. Look, first of all, LLC does make it difficult for somebody to come after you. It acts as a deterrent. It's an extra hoop that they have to jump. It's a big demotivator. Everything is correct. It makes things difficult, but it doesn't make things impossible. People will still come after you because that's how the real world works, right? But then secondly, the kind of protection that LLC offers, the kind of asset protection that LLC offers, you can achieve almost the similar kind of protection even without having an LLC, okay? So even if you do not have LLC and you want the same kind of strong protection that LLC offers, you can get that kind of protection. You have to do the following three things, and you will get almost equal protection as much as a LLC would offer, okay? What are the three things? Number one, you should have a very good insurance, right? You have to have insurance for real estate, for your property, but then have a better insurance, have a very good insurance on the property. So property insurance, have a very strong insurance, number one. I also recommend going one step further on the insurance and make sure that you have umbrella insurance, okay? Umbrella insurance helps protect your personal assets for things that your conventional insurance doesn't cover. Okay, so you would have property insurance for one property, second property, third property, fourth property, whether an LLC or not. But over and above all these property insurances, you should have umbrella insurance. Umbrella insurance is not very expensive, but you must have umbrella insurance. And umbrella insurance covers things that these property insurances or your other insurances might not cover. Okay, so you should have very good, strong insurance for the property, and over and above that, have an additional layer of umbrella insurance. Okay, so that is how you gain better protection. Okay, number one. Number two, use leverage. Use leverage. Okay, what I mean by use leverage is that if possible, don't own your property completely free and clear. Try to have some kind of mortgage, try to have some kind of loan, try to have some kind of lien on your property. Okay, in previous videos we have discussed that having mortgage helps you increase your rate of return. Okay, that we have discussed. But at the same time, if there is a mortgage or a loan or a lien on a property, it really keeps unwanted people away from being attracted to sue you for wrong reasons, right? So if an attorney sees that, or not an attorney, if somebody takes a look at your ownership and sees that this property is owned free and clear, that property now becomes very attractive for somebody to go after you. When people see that this property is not free and clear and there is a mortgage, loan or lien, and there is somebody else having their claim on this property, and we would not be first in line, that acts as a demotivator or a deterrent, right? So try to use leverage as a protection for you when you own property, unless there are other reasons, but so far as possible, don't own these properties free and clear so far as possible. Okay, and number three, always make sure to maintain your property properly. Okay, so maintain your property. I'm not saying maintain your property in a mint condition or something. Depending upon what you own, where you own, and why you own, you should maintain very strong safety measures at least. You know, by doing these three, having good insurance plus umbrella, having some kind of leverage or loan or mortgage or lien on the property, and maintaining the property as safe as you must. These three will also give you very good asset protection, even though you do not have a LLC. Okay, so keep these in mind. So moving forward, one of the questions that I got from you is, do I require a LLC to write off the expenses? And the answer is no, you do not require LLC to write off legitimate property related expenses. If the expenses are legitimate, they are related to your rental property or your rental business, all those expenses are deductible. Whether you have LLC or not does not make any difference. If you have a LLC, you deduct it under LLC. If you do not have LLC, you deduct that under your personal returns under Schedule E. Schedule E is for rental properties, but all legal, legitimate, ordinary, and necessary expenses for your rental real estate is all deductible. Okay. And the next thing is that you have to operate the LLC as a business. Okay, operate the LLC as a business. What do I mean operating LLC as a business? Look, you have to transfer the title of the property, or you have to own the title of the property in the name of the LLC. Okay, if you have an LLC and you want to use LLC legitimately, the title of the property has to be in the name of the LLC. Okay, then the LLC has to have its own bank account. If you need, you have to have its own credit card. Okay, it has to have its own bank account, its own credit card. If you have multiple properties and multiple LLCs, yes, you have to have multiple individual bank accounts for each individual LLC. You have to have multiple credit cards for each individual LLC. This is how you operate the LLC as a business, okay? You have to maintain separation. You have to maintain separation. You cannot commingle the transactions of all the LLCs together, and then many people over and above commingling all the property transactions together. They also commingle their personal transactions into the same bank account or on the same credit card. No, you cannot do that. You have to have proper separation, separate bank accounts, separate credit cards, separate transactions. You have to maintain separate books and records. You have to maintain separate accounting, do separate tax returns. It has to be proper separation. You also have to maintain proper corporate books and have proper minutes and proper agenda and meetings and everything. So you have to operate the LLC as a business. The titling should be correct. The bank account should be separate. Credit cards should be separate. Proper separation. You yourself should not pierce the veil of LLC by going from one LLC into the other and commingling things, or commingling all the LLCs and properties into personal and things like that. So you need to maintain discipline while maintaining separation of transactions, of books and records, of corporate records, minutes, everything. Okay, so you have to operate it as a proper business. Okay, and then one of the biggest problem with LLCs is when you go for financing. Okay, financing is one of the biggest issues when you want to own a property in an LLC, or you want to buy a real estate under a LLC. So let's discuss that. Okay. So what happens is when you want to buy a property under LLC, and you might have experienced this or you might know this, that most of the lenders do not want to do a loan for a LLC. Most of the lenders try to avoid doing a loan under LLC. And even if they do, the terms are not really as good as the conventional personal loans. Okay. The loans to LLC are commercial loans. They are not conventional personal loans. And those commercial loans to the LLC, most of the times they are not 30-year fixed. Okay, they are fixed for maybe 7 years or 10 years. And then the amortization schedule is not for 30 years. It is mostly for 20 to 25 years. So it doesn't have a 30 years fixed most of the time. The rate of interest is high. The down payment is high. You cannot do between 15 and 25%. They usually want between 25 and 35%. So the down payment is high. The closing cost for a commercial loan or LLC loan is high. There are prepayment penalties. If you prepay your loan, then you have to pay penalties. There is a stipulation of penalties in that commercial or LLC loans. So the commercial loans or LLC loans, most of the lenders do not want to do that. And even if they do it, it's not so good in their terms and conditions. Okay. So, but there is a workaround this, and following is how the workaround works. So what people do is they buy this property in their personal names, in their individual names. They do the closing in their personal name. They get their mortgage in their personal name so that it's a conventional mortgage, 30 years fixed, less down payment, good rate of interest and everything, no prepayment penalty and things like that, less closing cost. And once that loan on that personal or conventional loan is done, and they also get the property insurance, after that, they transfer that property from their personal name into LLC's name. Okay, so after the closing is done, mortgage is done, insurance is done, then they transfer the property which they closed on their personal name into their LLC's name. Transferring this from personal name into LLC's name is called as quit claim deed. It is QUITCLAIM, quit claim deed. So the attorneys do a quit claim deed and they transfer this from their personal into the LLC. Okay. I've seen tens of clients doing this. I've seen in last 20 years a lot of these transactions. I've never seen any client getting into any kind of problem thus far. Only one client was not allowed to do this because before he did this, he went to the lender and asked for permission, and they said, sorry, we cannot allow you to do it. But otherwise, in last 20 years and tens of transactions that I've seen, I've never seen anybody having any problem in the kind of structure that I just mentioned. Is this allowed? No, it is not allowed. But so far as it seems that so far as you make your mortgage payments in time and you maintain your property correctly, and then there are no issues and there are no issues that reach to the lender, then the lender seems to have a blind eye towards this kind of setup. Okay. If you don't make payments in time, if there are any other problems, if you go to bank and ask for permission, if for any reason your lender has to review your loan process, then there is a possibility that they might see this transfer from your personal name into the LLC name, the quitclaim deed that we spoke about, and they might then trigger what is called as a due on sale clause from the loan. Due on sale clause. Due on sale clause means that if you transfer this property to somebody, which in this case is your LLC, or if you sell your property to someone, then the whole mortgage is due right away. Okay. So what is due on sale clause? Due on sale clause is that if you transfer this to somebody, you have to pay the mortgage right away. Okay. So there is a possibility that if the lender finds out some problem with your mortgage, and then they see that you transferred this property from your personal name into LLC, then they would say, aha, see, you did something which you were not supposed to do under the mortgage. So we are going to now trigger the due on sale clause and pay us all the mortgage back. But in tens of, as I said, in tens of examples, in so many clients, I've never seen this being a problem at all thus far. And this seems to have worked well. Another thing, this whole thing works if it's a residential real estate. Okay, if it is a residential real estate, residential rental, then yes, your conventional personal loan is going to be better terms and cheaper terms and better things to do on the personal conventional side, and then transfer it to the LLC. But if it is a commercial rental estate, okay, then commercial rental estate will go for commercial loan anyways. And if it is a commercial loan anyways, then you might want to do it under LLC anyways, okay? And then the next issue for the LLC is, of course, the costs of forming and maintaining an LLC. If you have LLC, the formation and maintenance of LLC could cost you anywhere between $1,500 to $2,000 a year. So the last deterrent for you to use LLC is the cost of forming and maintaining LLC. Okay. Okay, so what am I saying? Am I saying that you should form an LLC, or am I saying that you must not form an LLC? Okay. Well, look, I'm not saying that you should or you should not. I'm saying that the reason so many of you guys are confused whether you should or whether you should not is because of so many factors that go in the decision making while we decide if a particular transaction needs LLC or does not need LLC. Okay. There have been situations where I have suggested one of my clients that do a LLC, and then in a very similar situation to the same client, I've in the next transaction said, no, for this transaction, it doesn't make sense, don't do LLC. Okay, so for the same client, depending from the deal to deal, I might say LLC is good, or I might say you don't need a LLC, you know, so that has happened so many times. There are a lot of factors that we take into account before we suggest a client that he or she must do or must not do LLC, okay? What are those factors? Of course, the first factor is the cost-benefit analysis. Cost-benefit analysis. We just spoke that the cost of forming and maintaining LLCs between $1,500 to $2,000 a year, right? So if you come to me with a deal where you are not really going to make multiple times of the cost, multiple times of that $2,000 in your net cash flow. If you come with a deal where the net cash flow, the rental income minus all the cash expenses, the net cash flow of that property is not multiple times of this cost, then I would never suggest that you do a LLC for that kind of deal, right? It doesn't make sense. If your net cash flow is going to be, say, $4,000, I don't want you to be spending $2,000 every year for an LLC. If the net cash flow is, say, $30,000, then maybe LLC makes sense, right? So you have to see the net cash flow and compare it with the cost and then decide if it makes sense or it doesn't make sense. This is one of the factors that we consider while we suggest if you should do LLC or not in a particular situation. The next is asset protection. Okay, I always look at the three asset protections that LLC gives. LLC gives you protection so that something happening at the LLC doesn't come on to your personal other assets, right? So that's one kind of protection. Second is, do I need to conceal my client's information? And that second factor, most of the times, is very, very, very important for me. If the client is a physician, if the client is susceptible to malpractice lawsuits, if the client has a lot of assets, very high net worth, concealing his or her information is one of the biggest reasons in my practice that I consider doing an LLC. Okay, and the third is, of course, it's an extra layer for somebody to jump. It's a deterrent, it's a demotivator, it's a hurdle. And you know, when people see LLC, they are automatically switched off. The next reason is the equity or the value of the property. Okay, if the property is worth say $500,000 or $2 million or $5 million, even though the equity at this point would be whatever 20-30% that they put in, but eventually as the mortgage is being paid, the equity keeps on rising, right? So the value of the property is what I look at. If the value of the property is, say, $100,000, I might or might not suggest LLC. But if the value of the property is $500,000, $1 million, $2 million, $5 million, I would definitely lean towards doing LLC. Okay, so that's the next reason. And the last reason is financing. Okay, financing, as I said, if I break up financing, I can break up financing in my mind in like three sections. Number one, if it's a commercial property, go for an LLC, go for a commercial loan because you're going to go for commercial loan anyways. Okay. But then if it's a residential rental, then I would be like, okay, if it's a residential rental, let me try and buy this under your personal name and get the mortgage and insurance and then quit claim that property into LLC. So that is the best of both worlds for me, right? So, and of course, I explain all the risks involved in doing that to my clients, but it makes sense to me because that gives me like best of both worlds. Get my conventional personal loan and then get a protection of the LLC also. Okay, and then the third part is where I have clients who have already owned more than 10 properties, and they already have more than almost 10 personal loans. And once somebody gets like 10 personal loans, and I don't know if this is like a practice or it's a rule somewhere, but once somebody has 10 personal loans, the bank doesn't want to do personal loan thereafter. And I don't know if this is something written anywhere or it's a law, it's a rule, or it's the practice. But once I've seen my clients, when they reach to 10 personal loans, then they do not get any personal loan anyway. So then they have to go for a commercial loan. And it might make sense to do the LLC anyways, and this backdoor entry might not work at that point in time. Okay, so financing is analyzed in that sense when we make decision about whether you should do LLC or not do LLC. Okay, hope that helps. And then there are other factors that we take into account. For example, do they have a lot of partners? You know, if they are going into this deal with multiple partners, LLC makes sense. We would consider LLC highly if we see multiple partners and then they have different profit sharing ratios and different contribution ratios and the equity is unequal and things like that. LLC makes all the sense, okay? If they have multiple states, then we tend towards doing LLC. And remember, if you have a property in a state outside, outside from where you are the resident, then you have to form LLC in the state where the property is. Then you have to form the LLC in the state where the property is. So if it is a state which is outside the residential state, I would most of the times always go for LLC and form an LLC in that particular state. That's how we make the decision. Next is, I had few questions in this series, during this series from my clients asking about holding LLC. Holding LLC is a formation where you have individual LLCs for individual properties. You have individual LLCs for individual properties, and then all these LLCs are owned by a holding LLC, which is like a parent LLC, which owns all these LLCs ownership under the holding LLC. Is it a good idea? Yes, it is a good idea if you have so many LLCs. It is a good idea from estate planning point of view and gifting point of view. It makes all the sense, but this is not something where I would give you a general yes or no. I would have to look at your situation. If you have so many LLCs in so many states, and then I want to achieve some kind of asset protection plus estate planning plus gift planning, then yes, I might go for a holding LLC and suggest that you do a holding LLC, okay? If you think you are in that kind of situation, please reach out to me and we can discuss if that's a good tool for you or not, okay? The next is, if it's a fixer flipper, right? It is not a rental real estate really, and you're going to fix and flip a property, or if you're going to get into a construction business, right? Then definitely we need to do that under an entity if possible, because that limits your exposure, that limits your liability. But for a fixer flipper or a construction, it is not always LLC, which is a by default best entity structure recommended. Okay. Again, I'm saying this: if it's a fixer flipper or a construction, then number one, yes, it should be under an entity, and I would most of the times not recommend that you do it under your personal name. Okay. So what I'm saying is I'm recommending entity for sure, but then I'm not going to recommend by default that you use a LLC only, because in that situation, and only in this situation, this is the one exceptional time. This is the one time, which is an exception, where I might consider doing a S corporation also, small business corporation, S corporation also, okay? So number one, yes, for a fixer flipper and construction, you should do entity most of the times, 99% of the times, okay? But, and secondly, choosing the entity, I might go for a LLC, I might go for a S corporation, depends from situation to situation. This is the one time, one exception where S corporation for a property transaction might make sense. Otherwise, usually S corporation for a property transaction is a horrible idea. Okay, we never advise S corporation for property. Okay, there are reasons for that, which are outside the scope of this discussion, but S corporation is a horrible idea when it comes to owning a property. Okay, so I hope the discussion is going to be some kind of help to you to understand how the LLC works and how owning a rental or real estate under LLC might or might not make sense. Of course, it's not a very clear yes or no. There are a lot of factors we take into account as we discussed, and depending upon your situation, we'll take all these factors into account and say, yes, you should do LLC, or no, you should not do LLC, or do it in personal, do it in LLC, or if it's a construction business, let's do S corporation or something like that. But this gives you an idea about what goes into the decision making when it comes to an LLC. Look, if you are serious about going into real estate and doing real estate business and trying to do multiple real estate, okay, you need a very good team on your side. Keep this in mind. You need very good attorney, real estate attorney, okay? Very important, very, very important. He or she should understand how real estate works, how LLC works, how the formation and various state things work, how the quit claim deed works, how the financing works. They have to be very savvy, good attorney for real estate. You need to have a good accountant, of course, very good CPA who understands, again, real estate very well and all the nuances that go with all that we have been discussing in this whole series. You also need a good bank or a good lender or a good banker to get your loans done. Okay, I cannot emphasize enough how much a good lender on your side could be so much of a help, not during the initial stages. You know, first, second, third properties, it's easy. As you go along, as you do more properties, it could either become more easier because now you have more equity and more income to show and more operations to show, but then it could become more difficult because your debt service ratio might have been messed up and your debt equity ratio might have been messed up, but they have to understand what you're doing, right? So you need a good lender on your side. That is important. And then you need a very good insurance guy who gives you very good insurance at very reasonable rates so that you are covered. And once you have a very good team built up, then things will become easy, slowly but steadily, slowly but surely. Okay. So I hope this helps. Keep sending me the questions with regards to real estate. Hopefully in the next episode, we will take a look at 1031 exchange, how it is done, what are the pros, cons, what needs to be done on that side. And in the meantime, if I see any questions, I would try to cover those questions also. Take care, be safe, and I'll talk to you soon. Bye-bye.